Welcome back to Investing Talk podcast today. We're going to be taking a focused look at Amprius Technologies, AMPX. You shared some information about this company, and our mission is to distill what's most important for you to understand right now.
Okay.
We've gathered details on their battery technology, how their stock has been performing, their financial situation, who they're up against, and what the analysts are saying. Our aim isn't to tell you whether to buy or sell, but to give you a clear, insightful overview based on what we found. So let's get into it.
Sounds good.
Amprius Technologies is in the business of high-energy and high-power lithium-ion batteries, mainly for things that move mobility applications.
Uh-huh.
What catches your eye about how they're set up?
Well, I think what's fascinating here is their core technology.
Okay.
Silicon nanowire anode batteries. The information suggests that this offers a significant jump in energy density compared to the traditional graphite batteries you see more commonly.
Right.
Think of it like this. Instead of using relatively larger particles of graphite, they're using these incredibly thin wires of silicon at the nanoscale.
Okay.
This structure allows them to pack more lithium ions into the same space, leading to higher energy capacity. And their Secor and Cymax platforms are being used in areas like drones and high-altitude pseudo-satellites.
Yeah, that's interesting.
So this really targeted approach to advanced battery tech in specific growing markets seems quite significant for their potential.
It definitely sounds like they're aiming for a specific niche. Now, looking at the stock's performance over the past year, it's up by nearly 29%, which has outperformed the U.S. electrical industry as a whole. More recently, there was a pretty noticeable jump of almost 12% on March 24th of last year. And that seemed to follow some positive financial news and developments with their batteries. Zooming out a bit to 6 months, we've seen a substantial increase of over 73% in the last 3 months alone, suggesting a strong upward trend. However, it's also important for you to be aware of the recent back and forth. The stock is currently around $2.81, having recently dipped by about 4.75%. And the price has swung quite a bit over the past year, from a low of 61 cents to a high of $4.21.
Whoa.
This kind of movement likely has your attention.
For sure.
What are your thoughts on this volatility alongside the overall positive direction?
Well, I think if we connect this to the bigger picture for you,
Okay.
the recent surge that coincided with positive news strongly suggests that the market reacts directly to company-specific developments. The longer-term upward trend likely indicates growing investor confidence in their technology and market potential. However, that recent dip and the wide trading range throughout the year are a clear reminder of the risks involved, especially with companies in the growth-oriented technology sector. These stocks can be more sensitive to news and market sentiment.
Makes sense.
So expect some bumps along the way, even if the overall trajectory looks promising.
All right, let's talk about the money side of things. Their revenue over the last 12 months is sitting at $24.17 million,
Okay.
with a notable $10.63 million coming in just the last quarter of 2024. That shows some pretty strong recent growth. However, they did have a net loss of $44.67 million over the same period,
Oh,
which works out to an earnings per share, or EPS,
right.
which tells you the profit or loss per share of stock of negative 38 cents. On a more positive note, their debt-to-equity ratio is 0%, meaning they aren't relying on borrowed money, which is generally a good sign for financial stability. So we've got impressive revenue growth alongside ongoing losses.
Uh-huh.
How do you see these financial figures shaping up?
This certainly highlights a critical point to consider. Sustainability. That strong revenue growth, particularly in the latest quarter, indicates increasing demand for their products. However, the continued net loss suggests their spending is still exceeding their income. That zero debt-to-equity ratio gives them some breathing room and flexibility, which is good. The key question is whether they can leverage this growing revenue to eventually become profitable.
Right.
For you, this means keeping a close eye on their future earnings reports to see if they can start to close that gap between revenue and expenses.
So when we weigh the good with the potentially concerning, the ongoing losses definitely stand out as something to watch,
Yeah.
as they could impact how much cash the company has on hand. And as we've seen, the stock can be quite volatile. On the flip side, their innovative silicon anode technology could give them a real advantage in those high-performance applications they're targeting. And that recent revenue jump is definitely something to be encouraged by. When you look at this mix of potential downsides and upsides, what stands out most for you in terms of what we should be paying attention to?
What's particularly noteworthy is the contrast between their cutting-edge technology and those fundamental financial realities. The potential for their silicon anode tech to deliver superior energy density is a significant asset, especially in demanding applications where weight and power are critical. That, combined with rising revenue,
Right.
suggests a company with significant potential for growth. However, those ongoing losses are a real hurdle. It underscores the challenges of scaling up production and becoming profitable in a competitive market.
Yeah, for sure.
For you as an investor or someone following the company, it's crucial to see if they can translate that technological advantage in growing sales into actual profits.
Turning our attention to how the market is viewing them. Overall sentiment seems to be leaning in a positive direction, likely fueled by that technology and some strategic partnerships they've formed. Analysts have even been raising their price targets for the stock, which suggests optimism. However, those underlying questions about when they'll become profitable and how well they can ramp up their production are still out there.
Right.
Does this positive market view align with how you're seeing things?
It does align, and it's important to understand why the market's positive take. As seen in those analyst upgrades, likely reflects a belief in their technological innovation and the recent revenue traction. The anticipation of future profitability and successful scaling of their operations is clearly a significant driver of this optimism. However, remember that these are still expectations. Whether they can actually achieve those goals will depend on how well they execute their plans and the overall market conditions.
Now, Amprius isn't the only player in this field. They're competing with other companies developing lithium-ion batteries. And notably, there's a lot of focus right now on companies working on solid-state battery technology, like QuantumScape Factorial Energy and Solid Power. Well, solid-state batteries could offer some advantages down the road.
For sure.
Amprius's current edge is their silicon anode approach.
Yeah.
How do you see this technological race playing out as someone trying to understand the landscape?
What's fascinating to observe is that we have different technological paths being pursued simultaneously in the battery world. While solid-state batteries hold the promise of potentially significant improvements, Amprius's current silicon anode technology is already providing tangible benefits in terms of energy density in the here and now.
Interesting.
This raises an important question. Will solid-state technology advance quickly enough to become a dominant force and potentially overshadow Amprius's advancements? Or will Amprius be able to establish a strong and lasting position in those high-performance applications before that happens? It's a dynamic situation that's definitely worth continued attention.
Looking towards the future, the potential factors that could drive growth for Amprius include the continued introduction and wider use of their high-energy density batteries and, of course, those improvements we've been talking about in their financial reports. The information you shared also suggests keeping an eye on any changes in regulations affecting the battery industry and the broader economic climate, as those could certainly have an impact.
Yeah, I agree.
What would you say are the key things to be watching as we look ahead?
Well, for me, the primary focus should be on their ability to turn that revenue growth into actual profit. Keep a close watch on their progress in reducing those operational losses. Also, pay attention to how quickly their Secor and Cymax platforms are being adopted in those target applications like drones and satellites, as well as any significant new partnerships or product announcements they make. Finally, keep an eye on that competitive landscape, particularly any major breakthroughs or advancements in solid-state battery technology, as that could shift the dynamics of the market.
Finally, from a technical analysis perspective, the stock has had a high technical rating from Nasdaq Dorsey Wright, which often suggests positive momentum in the stock price. However, there was a recent dip in pre-market trading. Without specific details on things like moving averages or the relative strength index, that's an indicator used in technical analysis from the sources you provided. It's hard to give a definitive technical recommendation. The average price target from analysts is around $10.
But there's a pretty wide range of opinions from a low of $5 all the way up to $15, which really highlights the uncertainty and the potential for significant upside or indeed downside. What does this technical picture suggest to you as someone trying to gauge the stock?
Well, that high technical rating suggests that, at least until very recently, the stock had positive momentum behind it. However, that recent dip and the very wide range in those analyst price targets really underscore the uncertainty surrounding the company's future valuation. Without more specific technical indicators, it's difficult to say for sure what the short-term direction might be. However, those analyst targets, while varied, do indicate a potential for significant price appreciation if the company executes well. But that wide range also reflects the considerable risks involved and the different perspectives on their prospects. So based on this overview, Amprius Technologies presents a really interesting picture of innovation in the battery space, with some impressive revenue growth. But that's definitely balanced by those ongoing losses and the volatility we've seen in the stock price. And as we just discussed, those contrasting analyst price targets and the recent stock fluctuations really highlight the complexity of the situation.
This information should provide you with a solid foundation for understanding where Amprius Technologies currently stands based on the information you shared with us. We certainly hope this has given you some clarity.
We'll leave you with this. Considering the rapid advancements happening in battery technology and the quite different opinions on what the future holds for Amprius, what single factor do you think will ultimately be the biggest deciding factor in their success?
That's a really thought-provoking question. For me, I would say the single most critical factor will be their ability to successfully scale up their production capabilities, while at the same time effectively managing and reducing their costs to achieve consistent and sustainable profitability.
Thanks for tuning into this analysis on Investing Talk podcast. If you found this informative, please subscribe, like, and leave a comment.